I'm Charlotte McLeod with investingnews.com, and here today with me is Mario Innecco. You can find him right here on YouTube on the popular Innecco 64 channel. Thank you so much for being here. Great to have you.
You're welcome, and it's great talking with you again, Charlotte.
Absolutely. Great to have you here as well. Happy New Year. Hope 2026 is going well for you so far. And we've got so much to talk about, to catch up on since our last conversation. I thought we could start with what's making headlines today, which is this criminal investigation into Jerome Powell from the Trump administration. So there's a lot of information that's flying around. I wonder if you can start by breaking down what you see happening there, what your initial impressions are.
Yeah, I mean, I spoke about that today in my video, and I was kind of surprised, but that this criminal investigation is underway. They've subpoenaed documents, and it's supposed to be related to the renovation of the Fed's headquarters in Washington, D.C., but Jay Powell came out and said it's not. It's basically because they want him to cut rates. And he's probably right. I think they're using any kind of let's say tricks to try to get rid of him, because I think the administration, even though they talk about how the economy is doing so great, they are desperate. And the reason they're desperate is because if you look at non-farm payroll, for example, that's been trending down, even though I know these numbers are doctored, but even with them being doctored, they're not looking good. And we have midterm elections this year, and they need something quick. They're desperate. They're so desperate that they also announced that I think Trump is going to make credit card rates limited to 10%. And that's backfired. The major credit card issuers like Capital One, I think the stock was down 6% earlier today. So yeah, it's all related to that. I think he's trying to get rid of Powell. He doesn't want to wait till May as quickly as possible. You probably know that I'm not a fan of central banking, so all this talk in the mainstream media that it's horrible, it's against central bank independence, but central banks, basically, they create inflation to keep Wall Street like whole when they have a crisis, and the people in general suffer, the general public, and they have suffered since the Fed was created in 1913. The dollars doesn't buy. I don't even think a penny of what it used to do in 1913. So to me, the best thing would be to just abolish the Fed. But I think Trump is not a sound money guy. He just wants to take over the Fed and print as much as possible. So that's how I see it.
Yeah. Of course, I do recall that you're not a fan of Fed and the central banks. I'm wondering if you can talk a little bit more about what you see coming in this environment. So we know that Trump wants lower rates. We know that Powell has been resistant to that. His term is ending in May, but as you're saying, it looks like Trump wants Powell out sooner. So what's the path forward then for interest rates, do you think?
Lower, especially in the short end, because they can control the short end rates, maybe up to a year. But the longer term rates is not so simple. When they started cutting rates actually in September of 2024, the 10-year yield was at 3.6%. And as we speak here, it's around 4.20. So I would expect the bond vigilantes to come out. They've been in hibernation for decades, but I think they're coming back. Yeah, so lower short-term rates, higher long-term rates, so a steep yield curve, and more inflation, because it's really simple. We've got a lot of debt, not just in the US, but in the whole world. And the only way to make that debt manageable is to make it worth less. So that's what they do best. Central banks and governments, they inflate. Inflation is not something that comes out of the blue. It's just them spending, the government spending too much money, and the Federal Reserve obliging with well, you can call it increasing reserves, or you want to call it money printing. So yeah, that's why I think gold and silver are making all-time highs today, and not to talk about what's happening in the Middle East and Iran. That could be another trigger for the metals.
Yeah, of course, I do want to also get your take on what's driving gold and silver prices. Certainly, the action that we're seeing today would be playing into that. What else are you looking at when it comes to drivers for the metals right now?
De-dollarization, I think, is important with what I mean. Even Trump's America's allies, even where you are, Canada, Greenland, Europe. No one even knows anymore if America is their friend, let, but let alone the other countries in the global south. And what happened to Maduro is a really stark warning to these countries. And I think, I'm not saying they're going to get rid of all their dollars, but they're going to hold yeah, just enough, as much as little as they need, and the rest they're going to be putting it in the the safest and the asset with the best track record, excuse me, in the last few thousand years. That's gold, and even silver. Now we're seeing central banks getting involved. India is putting silver back into the credit market from April this year. They're allowing people to use it to collateralize their borrowing. So yeah, that's driving gold and silver too.
I think with prices at the levels they are right now, a lot of people are looking at them. And I think it's clear from all the factors that the stage is set for them to potentially move higher. But what ranges are you looking at when it comes to prices for gold in 2026?
Yeah, I mean, there will be a correction along the way. I don't know, it could be next week, but I think we're going to continue to see a lot higher prices because, yeah, not just the fundamentals, but technically as well. I look at the technical analysis sometimes, and we've broken through some really key technical long-term levels. Like I think it was 2024. I was looking at 2,700, and we broke through there. And then we corrected below that level after the U.S. election as a testing of the breakout. And then from last year onwards, we've just kept going higher. And if you look at this chart, it's to the early 70s and it's logarithmic. It still looks like there's a lot of room. And silver, you probably heard of this cup and handle formation. That's 45 years. And we finally broke out of that late last year. And yeah, a lot of people have been calling tops for silver, but it just keeps going. So yeah, I think we'll be a lot higher at the end of this year. Along the way, of course, it's difficult to tell exactly what it's going to do.
Yeah, I know silver, of course, is inherently volatile, so definitely hard to predict the in-betweens. But so we have gold and silver prices there at all-time highs. You mentioned before we turned the camera on, there's stock market indexes around the world that are also at highs right now. And I think that can be confusing for investors who might not expect these things to be at highs together. So what can you say about what's happening in that respect?
I think it's a little bit like if you look at Venezuela, for example, like a decade ago, maybe less, and Zimbabwe and Brazil. A lot of times their stock market indices perform really well. And the reason it did is because they were pumping so much money and credit into the system, inflating the system. And I think that's what's happening in the West as well. I've seen a lot of headlines this year here in the UK because the FTSE broke 10,000 for the first time ever, and everyone's really excited. But if you price the FTSE in terms of gold, we're actually really dipping. And to me, that's the only way to price being a sound money guy. It's the only way to price assets in terms of gold. So I would say to investors, yeah, maybe buy the stock market, but be aware that it's kind of a false value. I think, in my opinion, if you can, yeah, if you can have some gold and silver on the side, it might help neutralize the loss of purchasing power in the currency as well. And it says, Charlotte, that gold and silver are outperforming the stock market, and I think and the bond market for that matter, and I think that's going to continue.
I think it's very tricky for people who are looking at the stock market and they do keep seeing it go up and up. What do you think would be the trigger at this point for a correction there
In the stock market?
in the stock market?
Yeah, I mean, it's people have been calling tops the last 6-9 months, and it just keeps going up. Maybe it could be some kind of crisis out of left field, a banking crisis, maybe triggered by this credit card announcement or anything else, or it could be like the let's say bombing of Iran by the United States. That could be it. We could see a sharp correction in the stock market lower, but then because oil prices would also like go through the roof, and that hurts the economy. But then I would think that the central banks and the governments would jump right in to to save the day again. So they're not going to let things get out of hand. So yeah, but then again, gold and silver will do even better. So yeah, everything goes back to gold and silver, and I know it's like a bit of a repetition, but we're not in normal Goldilocks times like the 90s or the first decade of the 21st century. This is I think like the end of this fiat currency regime, and when things are near the end, the people in charge and the system itself gets desperate, and they try as hard as possible to keep it going. And I think that's what gold and silver are telling us. I think the system will be reset when we see things like the Dow gold ratio or the S&P to gold ratio go down to levels that we last saw maybe in 1980 or even 1933. So a lot of room for, I think, for gold and silver and even hard assets in general, commodities, to outperform paper assets.
Yeah, I remember last time we spoke, we talked about the importance of gold and silver, but also real assets, hard assets. So I'm wondering, are there any, aside from gold and silver, commodities that you are bullish on right now that you think people should be paying attention to for 2026 and beyond?
Yeah, I guess copper, that's making all-time highs. Platinum, palladium, all the base metals, I think, and also not just the fundamentals are look good for these metals, but also the geopolitical situation in the world, the fact that the world is breaking up in terms of we don't have the US being the hegemon anymore. We have like a multipolar world, and the US is trying to get back into producing rare earth metals and commodities, because the West has just neglected that in the last 30 years, because we have this environmental philosophy of not digging, nor exploiting the natural resources of our countries, and they let the Chinese do that, and they control everything now. So that's a big problem. So I just saw that the U.S., the Pentagon invested $150 million in a mining company that mines gallium, which is something I'm not even sure what it's used for, but it's one of these rare earths. So yeah, I think rare earths, base metals, precious metals, even maybe oil. I think that's been kind of on the back foot and kind of a hated commodity. So I think it could surprise on the upside, and it could be because of what's happening vis-a-vis Iran in the Middle East.
Well, and you mentioned China's influence on the critical minerals market, and that goes back to another point we touched on last time, which was China's growing role in pricing gold and silver. So I wanted to check in with you on that. There's been a lot of China developments when it comes to precious metals since then. How is the dominance of China developing since we last spoke about 6 months ago?
Well, it's even more clear that it's becoming more dominant. Yeah, it's. Well, I just saw earlier today that the price of silver on the Shanghai Gold Exchange and the futures exchange was trading around $93, $94. And I think the Chinese exchanges, they're less leveraged than COMEX or the LBMA. They're real physical markets. Not saying that maybe there might not be speculation there, but it's less speculative. And I think that's one of the reasons why gold and silver have been going up so much, is because the paper game is now unwinding because, yeah, people want the physical. And we've had also in silver the supply deficit, production deficit for the last 5, 6 years. And we have countries like I said earlier, India. They need a lot of silver, not just for to back loans, collateral, but they're also into solar power a lot, and they have a growing economy and a huge population, so they need a lot of this stuff. And also, unfortunately, the world seems to be becoming more and more dangerous and susceptible to a major war. And raw materials always become really important during times of war. So I think that's one of the reasons why, that's happening as well.
Great point. And I wondered if I could get your take on the Chinese silver export controls that we saw getting a lot of attention toward the beginning of the year. Are those significant for the market? How are you looking at it?
Yeah, I think they are. I mean, they definitely are, and some people didn't think they would be, but I think it's one of the reasons why silver's gone up already this year. I think it's settled around 76. I've got the numbers here. Hold on, I wrote them all down. Yeah, it's actually silver settled at 71.60 last year, so we're up. I think, where are we now? 85. So we're already up $14. So I think it's having an impact because China realizes that America is going to do the same thing. They're going to close off and control exports because, yeah, they're the two biggest rivals. So it's normal that China is doing that. And it's not the biggest silver producer, but it does refine and produce a lot of silver related stuff. And I definitely think they wouldn't approve silver being shipped to the COMEX or the LBMA. So I don't think it's a blanket, let's say, blocking of exports, but they're going to be a lot more careful of who, what kind of silver and to whom the silver is shipped abroad.
Another point I wanted to ask you about silver when it comes to China and maybe India as well. You're mentioning the solar demand from those countries. I was reading last week, I think it's Chinese companies that are looking at substituting silver in solar panels as the price goes higher. So do you see that having a big impact on silver industrial demand moving forward, or what do you think?
I mean, I'm not an expert like in all those details, but from what I hear from people who have looked closer at this than me, is that there's a lot of goods that need silver. That the silver is so minuscule in that product that even if the price of silver doubles, it doesn't make too much of a difference to the price of that product. But of course, there will be things that, like solar panels, that maybe they'll try to substitute. But the other thing is that the more valuable silver becomes, it could be like a substitute in terms of jewelry for gold, and it could be even become like a status symbol, because with silver at $20, it's not, but if it's like $500, if you're wearing silver, you've got money, right? So yeah, it's not just the industrial. I think the jewelry part could be interesting.
Yeah, I agree. I haven't heard too much about that yet, so thank you for bringing that up. And as you said, you are in touch with a lot of experts. I wonder for silver, there's so much going on below the surface there. Are there things you've been hearing or noticing that you think investors might be missing right now when it comes to silver?
Yeah, I mean, one thing you won't hear in the mainstream is the situation vis-a-vis COMEX and the LBMA, and the fact that the the physical silver in those two exchanges are, the supply, and the availability of it is going down quite a bit, and you don't see the mainstream cover that much. And I think it's one of the reasons why people have been shocked with the fact that silver just keeps going up, because they don't understand that, because it's such a leverage market in that there's a lot of shorting, paper shorting, and if other counterparties are demanding physical, these shorts, they're gonna have to buy the contracts to close it out, and that drives the price higher. I think, yeah, we hear very little about that on the mainstream financial press. That's something that I think people need to like be aware of.
Yeah, I'm starting to hear more and more about how these large entities are all starting to want to take delivery of silver. Is there anything more you can say on that note? Maybe who is doing this, what we can expect to see moving forward?
Yeah, I think the institutions that want to take delivery are sovereign wealth funds, very wealthy individuals. And I think the penny is dropped and they don't trust the paper contracts, and also central banks in the Middle East. I think the BRICS, aside from gold being a really important part of their new monetary like architecture, I think silver is going to be part as well. And I think like places like Dubai and places in the Middle East, Saudi Arabia, they want to be a hub for silver. So they're not going to just buy futures on COMEX or unallocated silver on LBMA. They don't care. They just want the physical. Yeah, the paper is nothing for them.
That's really interesting. So potentially BRICS and other countries moving from, well, maybe in addition to gold into silver. And I think we all know how impactful that's been for gold. So would you see them putting silver as important as gold, or maybe a secondary metal for them?
Yeah, secondary, I guess. Yeah, but important, more important than it's been in a very, very long time.
Yeah, that would be quite impactful. And I think as people are watching the silver price move, they're also looking at the stocks and wondering why the silver equities haven't performed as well as they might think they would given the high price. So do you have any thoughts there? I know when it came to gold stocks, we had to wait for a while for them to catch up to the price. Is that just what is happening here with silver?
I think so. Yeah, I think so. And yeah, maybe there's still a lot of disbelief that the price might not stay up here for too long, so people are a little more cautious. But I think the silver miners, they've got the best potential, really, even more than the gold miners, and that's where I've put my money to work in. I mean, I have some gold miners, but I've shifted a lot to the silver miners. You just have to be patient.
I think it makes sense in terms of where we are right now. When it comes to the silver stocks, are you focusing on the miners or developers or the smaller companies? Is there an area you like more than another?
Oh, just like companies that are already producing. Yeah, not the. There's not too many like silver exploration companies, and there's not that many primary silver producers, so it's tough. But I've got the major silver miners in my portfolio. I don't think you need to complicate it.
Yeah, it's kind of funny to ask that question because you just don't have that many choices. I don't think you can go overly wrong in the silver stocks. As we're getting to the end here, I'm wondering where would you place us overall in the precious metals bull market right now? Because typically we hear that gold moves first and then silver follows, and definitely it seems like we're going down that path, but it doesn't feel like we're at the end at all, really. So what are your thoughts?
Yeah, I mean, I have a couple of dates. I look at cycles. One of them is around 2027, 28, and that's to do with the Dow Gold ratio. And I've looked back in history, like from 1933 to 1980, we went from 2 to 1 in the Dow, and then back to 1 to 1. And that cycle took 47 years. And so if you add 47 to 1980, you get 2027. But I've heard from people who are a lot more thorough and have done like really long-term analysis of the cycles going back to like the 1600s. And I think it's Bert Doman. He's a German American investors in the precious metals, and he's got a date of 2032. So I think we still got quite a bit of time in the precious metals bull market. I don't think we are like in 1979, which was like the last year of the 1970s bull market that culminated in January 1980. I think we got more time on our hands.
Definitely, I agree. It feels that way. And just before I let you go, any final thoughts that you would leave investors with heading into the new year?
Yeah, don't leverage and be right and sit tight. That was a saying from Jesse Livermore. And I think, yeah, being long gold and silver has been the right thing to do. And I think is going to continue to be. So, yeah, don't be distracted by the naysayers and just stick with it.
I think that's a great place to wrap up. So thank you so much for coming on to talk about gold and silver and what's happening in the markets right now.
You're welcome. Thank you for having me on.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Mario Innecco.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.